But moving on, our guests continue to join us. So apart from Sudarshan Sukhani, Mayuresh Joshi is also with us to talk about individual stocks. Mayuresh, I wanted to talk about Asian Paints because that's been the biggest loser today, down about 5% at a price of 817. How does the risk reward look now?
Afternoon, Sonia. Clearly, I think if you look at the trailing averages in terms of valuations, it is trading on the higher end of the band. And if you look at the historical averages, it trades anywhere between 26, 27 odd times. However, the premium valuations that Asian Paints got was because of its leadership position in the decorative painting. And clearly, I think even in economic depressing times, I think the volume growth did hold up for Asian Paints. But now again, I think when you break out the numbers don't look that impressive probably. And again, I think the kind of headwinds that the management was talking about probably coming through in the latter half of this fiscal, I think that is going to take some amount of toll as far as the EBITDA margins are concerned. To a large extent, I think the fall in input costs, both in terms of titanium dioxide and monomers, is largely discounted by the markets. But then again, there are a lot of competition intensity pressures coming through, which will also have an effect in terms of how pricing moves up. The capex is still held out at around 700 odd crores for the better part of FY16. So our take is that the ROEs of around 33% that the company had posted for FY15, you will see a gradual improvement probably happening over the next year, year and a half. And again, valuations on the higher end of the band. So again, clearly, I think wait for declines, significant ones, at least an 8-10% decline before you probably start accumulating the stock.
Okay, Mayuresh, hi, good afternoon. Let's talk about your stock pick, Surya Roshni.
Afternoon, Anuj. Clearly, I think if you look at this company, two major divisions that it operates from, the lighting division and the steel division. The steel division has been a laggard for Surya Roshni with huge amount of debt onto its books, and that's what probably affected their consolidated cash flows. However, the lighting industry, I think, has grown at a very, very decent pace, and if one really assumes the overall lighting industry to go at 22.6% on a CAGR basis over the next 2 years to touch an industry size of 25,500 crores, I think players like Surya Roshni have a long way to go. So I think the lighting contributes around 40% of the consolidated top line for the company, and the EBIT margins of around 9.7, 9.9% are a testimony to the fact that once the volumes and the revenues from the LED part, specifically in the lighting division, start increasing, the EBIT margins would also start expanding. 2 lakh retailers, and clearly I think if you're looking at the kind of lighting exposure to go up to 45% over the next 2 years, with value adds like fans contributing 250 crores from the 60 crores that it has posted in FY15, other value added products like steam irons and other appliances contributing 200 odd crores, you're probably looking at a healthy expansion on the EBITDA front. And clearly in terms of even the top line, we're expecting a 6.2% top line growth to 3,223 odd crores by end of FY17, and the bottom line close to 80 odd crores, a CAGR of around 21.6%. In terms of valuations, Anuj, 7.6 times, which you believe if you do a comparative check between the other players with a similar market cap, for the steel player APL, for the consumer business or the lighting business, you look at Orient and the other players as well, I think it's attractively placed. So our target price stands at 183 over the next 12 months.
All right, Mayuresh, thanks a lot for that. Well, in a while you'll see some clarifications from Eros International. More than clarification, they're just trying to assure the investors that everything is fine with the company. So that's on Eros International, which probably has been your stock of the day, down about 18% right now. In fact, at one point was on the down circuit as well.
Oh yes, in fact, they've said that they would like to reassure their shareholders that there has been no material change to the previously announced strong fundamentals of the company. They continue to be market leaders in the Indian film industry with a dominant market share of the global Indian box office. And the analyst downgrade or upgrade of stocks regularly is not such a cause of concern. Note that Wells Fargo did not revise down their earnings estimates for the quarter or the year. So there's some reassuring statements coming in. By the way, some national news that's quite disturbing. An earthquake, there are some tremors that have been felt in Delhi, in New Delhi. So we hope everyone's safe over there. But as of now,
the earthquake is in Srinagar.
The earthquake is in Srinagar?
Yeah.
Okay, and okay, that's some footage coming in from the CNN IBN office in Delhi. Remember, there's an earthquake that has hit Jammu and Kashmir, and in Srinagar rather, and the tremors have been felt in the NCR and the Delhi region. So that's some live footage that's coming in. Let's cut across to our sister company, CNN IBN.
It could have originated somewhere further north in Jammu and Kashmir. We will try and get you more from the Met Department, which would be tracking this very closely. And In fact, I think it has finally stopped shaking. CNN senior editor Jyoti Kamal joining us on the phone line. Jyoti, we continue to feel a little bit of shocks here in the studio as well. Jyoti, could you give us some more details about what it's like in the northern parts? You're reporting from Chandigarh.
Well, that's right. In fact, it was a strong but a brief jolt that did occur here in Chandigarh. But before that, there were these minor tremors, but they were not being really noticed. But then about 3 minutes back, you can say 3 to 4 minutes back, there was a strong jolt that was felt. And in fact, as we came out of the office, we see many people in this area, all out of their office buildings and all out of their kind of residences, and they've all kind of gathered in the parks and looking towards the buildings because they say that they continue to feel these slight tremors. So that is the situation here. There was a strong but a brief jolt, but there are these minor tremors that have taken place before and after that particular jolt.
Right. And Jyoti, again, this is...
All right, we'll try and get you more details on that. But as you heard, a lot of tremors felt in various parts of North India and in Islamabad as well. But more details on that in a bit. We'll take a break for now. Coming up, Morningstar's India conference has kicks off in Mumbai tomorrow. Andrew Lil of Morningstar will join in just a while from now. Well, this is fairly big. The earthquake has a magnitude of 7.7 and that has struck northern Pakistan. That's the latest we're hearing from the USGS, and that's the reason why we're facing or feeling tremors in various parts of India as well, including Delhi, the NCR region, various parts of Kashmir. You can see the chaos in our CNN-IBN office and in various parts of India. That's all we have as of now. It's a fairly severe earthquake that has hit northern Pakistan. It's happenings, but for now, let's get back to the markets. We have a gentleman, a guest who joins in now in our studio. Remember, as we were telling you before the break, there is a Morningstar Investor Conference 2015 that kicks off tomorrow. That's on the October 27th and 28th, and lots of big faces over there. They have Jayant Sinha, the Ministry of State Finance, who's speaking at that conference, and lots of big voices like Akash Prakash, Ramesh Damani, Sanjay Bhattacharya, who are going to be addressing that conference as well. Andrew Lil, the Chief Investment Officer, Asia Pacific of Morningstar, has flown down to India.
Well, market at low point of the day, the Bank Nifty also at low point of the day, and two stocks responsible for that. One is Axis Bank. If you pull out the intraday chart of Axis Bank, that stock is now seeking lower levels. In fact, it's fallen about 0.5% more than that in last 5 minutes of trade. That's Axis Bank that we're talking about, and the other stock is Larsen & Toubro. That's Axis, as you can see on the screen, and Larsen also. Let's pull out the intraday chart of that one. That also had a bit of a vertical decline, so not looking good for a couple of these heavyweights. But let's talk about mid caps. It's time for our Monday special Mid Cap Mania with Nigel D'Souza. Nigel, what's on your radar today?
The stock that I'm going to talk about is KCP Limited. The stock has seen a big run in this month itself. But I'll tell you first what the company does. It's into cement, it's into sugar. They also have an engineering products business as well as power. In the last 1 year, the stock in fact is higher by close to around 100%, 97% roughly. And if you take a look at it, in October 2015 itself, it's higher by a good 35%, and that's why the stock really caught my eye. Taking you through the shareholding pattern as well, promoters hold roughly around 47% stake, and DIIs, they hold close to around 11.3% stake. A few funds that hold these shares are SBI, we have HDFC fund as well as Reliance Capital Fund. All of them, that's the shareholding up for you on the screen. I'll take you through the financials. The first quarter of the year looked very, very good. We only have the standalone numbers because the company discloses only the standalone numbers. So these numbers, remember, does not include the sugar business because that is their sugar business is in Vietnam. So that business is not included in these numbers. However, the numbers looked very, very good. So if you take a look at it on the top line itself, there was a big surge. It was higher by close to around 50%. The profit after tax came in at around 34 crores. That compares with the net loss of close to around 7 crores. Let's compare this first quarter now with the entire of last year. So you take a look at it, the top line was roughly around 200 crores. In the last full year, they did nearly around 600 crores. But look at the profitability. In the first quarter, they did close to around 34 crores, while in FY15, they did close to around 16 crores. Remember, just to alert all our viewers, this doesn't include the sugar business. That's the Vietnam sugar business. So given that if that's not dragging the bottom line, then just comparing the first quarter of this year and last full year, it's looking very, very good. One primary reason for their margins expanding is their power and fuel costs as a percentage of sales has fallen from around 30% all the way to around 15% as this graph is telling you. Now we don't have a lot of details because the sugar business, they only disclose the consolidated numbers in the final quarter of the year. But let's take you through the cement business. And the cement business, it has 2.3 million tons at an EV of around $120 per ton. It comes to roughly around 1,800 crore rupees. The net debt is around 260 crores. So entire EV of the company is at around 1,450 crores roughly. And if you take the cement business by itself at around $120 per ton, that's an EV of $120 per ton, it'll be worth around 1,800 crores. You'll say maybe the EV should be taken at around 100, then that figure comes down to around 1,500, 1,400 crores. So there appears to be value, given that in fact we have seen that the cement business has been looking quite good as well in the last couple of quarters. Risk should be up for you on the screen, though that's quite important because they're involved in cement as well as sugar. In the last couple of years, in fact, both these two sectors, they have been under pressure. So commodity linked risk definitely does exist. Subpar monsoons, never a good thing for the cement space, as well as for their hydel power, their captive hydel power. So those are a couple of points up for you. Cement capacity utilization has been very, very low in South India. That's what's helping prices. If in fact it doesn't pick up, then we could see pressure on prices going ahead. And the Vietnam sugar business could face some import pressure, particularly from Thailand. So those are some of the risks that we just listed. But let's take you through then some positives. The pickup in the Indian as well as Vietnamese economy, that could be good. Secondly, the Make in India push could benefit them. And also, if you see there could be a pickup in the cement industry. We always have that ratio of growth in cement and the GDP growth of our country. So that picks up, then in fact that looks quite good. And also they say that in fact the sugar industry could have bottomed out. So rather interesting stock. The second quarter of this year, once their numbers are out, I think that will be a key catalyst for the stock going ahead. Back to you all.
All right, Nigel, thanks so much for pointing that out for us. Well, moving on, Meghna Malkan tells you what to buy or sell today for a reverse trade tomorrow. Meghna, what do you have for us?
Hi, good afternoon. Yes, I have two buy picks for the day. My first buy pick would be on Dish TV Limited. The stock is taking support. It's moving in a consolidation, taking support at good levels on the daily chart. Weekly charts are showing good strength. Therefore, a buy call on Dish TV with a stop of 107. And I would expect a target of 114 on this call. My second buy call is on Tata Chemicals. After a 30 rupees move from the bottom from 470 levels, it had shown a small consolidation around 10 rupees. It's now starting to moving out of the consolidation. So therefore, a buy call on Tata Chem as well with a stop of 413 for a target of 437. Thank you.
All right, Meghna, thanks a lot for that. Well, Varinder now joins us with a list of buzzing stocks. Varinder?
Well, clearly, if you just watch out for some of the stocks which are falling or moving higher on back of results impact, you will find more losers. Look at HIL, the erstwhile Hyderabad Industries Limited. That stock last time I checked was down over 15%. Sterling Technologies, you guys have been mentioning about. One theme which is playing in the mid-cap and small-cap segment is stocks which are related to food and drinks, you know. Heritage Food, KRBL, both these agri stocks have been moving higher since last few days. GM Breweries continue to be on the upper circuit of that 5%. On the losing side, Eros International, of course, you mentioned Parental Drugs India, Sayadri Industries, PC Jewelers is down 6-7%. All the sugar stocks are down today, whether it's Shakti Sugar, Bajaj Hindustan, Shri Inca Sugars, Asian Oilfield, One Life. Shrey Infra is actually one stock which has lost nearly 20-25% in the last 4 or 5 days, even after that announcement coming in. And JSW Energy is weak today as well. But a lot of gainers and new names in the small cap segment. Watch out for them. Nahar Poly, which is up 20%. BSL Limited up 20%. Rajesh Strips, Super Sales India, RDB Limited, Morphin Labs, V2 Retail up over 10%. Frontier Strips, Rane Brakes, Deccan Goldman is buzzing today as well. Elegant Marbles is one stock on good volumes. KGD Limited is another stock. Simplex Projects, Diligent Industries, a new name coming up. Camphor is another one. Bafna Pharma, Dalmia Bharat Sugar. Raju Engineering is another one. Control Print India, Sanghi Industries, Kanodia Chemicals, ICVL Chemicals, Indian Toners and Fairdeal Filament are many stocks which are buzzing anywhere between 5 to 20% in the small cap segment.
Okay, that is a long list of newcomers that you've given us, Varinder. I thought RDB was a band, but today I got to know that it is a company listed on the stock exchanges as well. Thanks for all of that. Well, those are some stock ideas and some buzzing stocks. We still have about 15 minutes to go before the end of trade. Ambrish Baliga, Sudarshan Sukhani and Mayuresh Joshi are with us for the closing chat. Gentlemen, afternoon to all of you. Mayuresh, tomorrow we have the Indigo IPO that's opening up. What's your recommendation on that one for our viewers?
So Sonia, again, I think our recommendation is to subscribe at the higher end of the band, and we are purely going by the logic in terms of the sheer numbers that the company has been posting. So if you take the trailing averages in terms of how the top line has grown at 39% on a CAGR basis, close to 13,900 odd crores. If you're looking at the bottom line, coming close to 12,096 odd crores. The first quarter itself, I think they posted profits of 640 crores. When you look at their fleet size, so I think the increase in fleet size from 98 carriers to 154 carriers over the next 2 to 3 years, I think that will definitely augur well for them, considering the position that they are in terms of cash on their balance sheets. On an EV to sales parameter, we probably compare that with Ryanair, because I think there are no comparables on the Indian market because of the losses that the domestic carriers are making. So on an EV to sales of around 2.1 times, a price equity of around 21 times earnings, we believe that the IPO is quite attractively placed. So I think if you leave aside the inherent factors related to how dividends are getting paid out, kind of debt reduction on the books, I think the management is pretty clear, as we've heard on media, that the payout policy probably might continue going forward. And again, I think debt reduction is on their minds, and again, profitability is one key parameter that they're looking at. So yes, I think we have an optimistic view on the IPO. We are subscribing it. We have a subscribe view rather at the higher end of the bank.
Okay, well, let's pull out Bank Nifty and Axis Bank again, because they are now seeing even lower levels. Axis in particular actually is having a bit of a rough time. That's the Bank Nifty for you. Amrish is also with us. Amrish, hi, good afternoon.
Good afternoon.
What's happening to Bank Nifty? That's clearly, at every high level seeing some kind of selling pressure.
No, I mean, as far as the PSUs, banking space is concerned, I think the NPA issue is going to be there.
I'm more worried about the private.
No, but then as far as the private sector banks are concerned, they've done decently well if you're talking of the last, 8-9 months. So it's quite natural that you will have some amount of profit booking as of now.
All right. You had a follow-up question? Okay. Well, Sudarshan Sukhani is also with us. Sudarshan, what would the recommendation be on the index for tomorrow? Because, today it's been a nothing sort of a day. There's still a bit of a downward bias. And given that we're heading closer to expiry, how does a trader trade the Nifty now?
Yeah, first of all, let me tell you, I felt the Delhi earthquake, and I realized that my chair and table were both moving, and then all of us had to go out. So it was real and quite scary.
I hope everyone's okay now over there.
Oh yeah, everything is okay, and yeah, the heartbeats are easier.
Okay, so there are bigger things in life than trading, right?
Sometimes, yes. See, the Nifty is now in some kind of a no trade zone. Between 8300 and 8200 tomorrow, I don't think we should be taking any position. I would still be upbeat and bullish on the Nifty. If the Nifty falls and finds support below 8200, around 8200, I would be a buyer. A breakout above 8300 would definitely see me go long in this market again. But if this Nifty simply meanders around here, going 30 points down, 30 points up, not really giving us a sense of direction, then it's best to stay away. But the buyer still remains to be a buyer, not a seller.
Okay, let's pull out the intraday chart of Ultratech Cement. That stock all of a sudden has lost 2% in the last 10 or 15 minutes of trade. Just see the intraday chart of Ultratech Cement and you'll see that. Sudarshan, a word on cement space and Ultratech in particular?
Well, Ultratech and ACC are both making bullish patterns. Now, the problem, Anuj, is that they don't have to oblige us by going up on the day we talk about it or by going up day after day. Ambuja is not giving us the same bullishness. It's fairly dismal. But Ultratech and ACC are not short-selling candidates. The declines may simply be a preparation or preparatory to a reasonable up move. So for both ACC and Ultratech, I would be a buyer. This market is not giving us signs of a deep correction. 100 points here and there is different. That can come anytime, but the charts are much better than we imagine.
Okay, well, we have a couple of big earnings lined up tomorrow, the likes of Maruti, Lupin, etc. So we'll talk about the expectations in a bit. But before that, Mayuresh, would you have any thoughts between the two? Where do you see the higher, risk reward?
So clearly, I think if you talk about valuations in the pharma space, I think our belief is that Lupin is fairly valued at this point of time. And though I think the blip in earnings that one really witnessed in the quarter gone by, I believe that it is a qualitative company. But again, valuations pose headwinds in terms of how earnings will pan out. And clearly, I think the kind of backward integration that one talks about with the acquisitions that they've done, MedPro and the likes, I think that is also going to take some amount of time on a consolidated basis. So purely from a risk reward, probably I think we're still liking Maruti. I think we believe that the volume growth should be quite decent. And yes, I think though in sense competition has come in, at least on the lower end from the Renault Kwid. And again, I think the S-Cross not doing so well with higher discounting coming through. I think the overall market share should get maintained. We're still believing Maruti should post an EPS of 225 odd rupees for FY17. So our accumulative rating still continues at a target of 4950.
Okay, that's on Maruti. But Amrish, a word on Larsen & Toubro? Do you like the stock?
Larsen & Toubro, I've been liking this stock for a while, and I think on this correction, one should still look at buying that, possibly at levels of closer about 1450, 1465, because this draft policy on capital goods, I think that's going to be quite positive for the capital goods industry overall. So, in this sector, I would surely be looking at L&T as well as BHEL.
Okay, L&T and BHEL is what Amrish will look at. Mayuresh, anything from the broader market that you like?
Oh yes, again I think out of the results that have come so far, Anuj, I think the NBFC space, LIC housing is something that we still believe that the growth potential exists for the company. The advances growth has been quite stupendous, and our outtake is 18-19% not rolled out for the rest of the year. So again, on a 12-month basis going forward, our take is that the NIM should expand meaningfully. And again, I think the cost of funds going down, the incremental yield on the investments should also remain stable around the 10.85-11% kind of a mark. When you're talking about asset quality, the gross net performing ratio stays quite stable at 0.6. The net asset ratio probably staying stable as well. So again, on the price to book comparison, I think we find it extremely attractive at this point of time. So LIC housing is something that we believe can do very well over the next 9 to 12 months.
Okay, so two big earnings tomorrow. We have Maruti and Lupin, and both actually react quite significantly to earnings. Maruti in particular, which has been reporting in the past really strong earnings, and the stock of course has corrected a bit, but still kept making lifetime highs at least up until last month. Sonia tracks the stock. What should we expect, Sonia? Good numbers again?
Yes, expect a very good set of numbers yet again for Maruti. So a revenue growth of almost 14% is what we're expecting at 13,984 crores. That's because the volume growth for Maruti has been healthy this quarter, up almost about 10% year on year and 4% quarter on quarter. So it's been a healthy volume growth for Maruti this time around due to the new launches like the S-Cross, the Ciaz, as well as the Alto Automatic. On the margin front too, the last many quarters, Maruti has been surprising on the upside. So if you just take a look at how the margins have done, in Q1 of FY15, the margins were just 11.7%, and in Q1 of FY16, they were 16.3%, and we're expecting that positive trend to continue because of falling raw material prices and because of the improving product mix as well. On the profitability too, we're expecting the profits to go up by almost 45% at 1,240 crores. Remember, the margins may move up, but the higher ad spends because of new launches like S-Cross, etc., could restrict the margin upside a tad bit. The realizations per vehicle will also rise further this quarter because of falling raw material prices. So good numbers expected from Maruti, but the stock has, seen a big up move. It's up almost 32% this year already. So it's priced to perfection. If there is any disappointment, then you could see profit taking in this stock.
Okay, so that's Maruti. The stock actually trading at the low point right now, but keep in mind it has had a strong rally that we have seen all through the year. The other big number of course would be Lupin, and that stock also has been extremely volatile, but again a stock which is closer to its highs than lows. Let's go across to Ekta to find out what the street is expecting on this one.
Well, Anuj, Lupin is in fact the top performer on the Nifty. It's already given returns of around 46% on a year-to-date basis, already trading at expensive valuations of around 26 times FY17. However, we are expecting a subdued set of numbers tomorrow. For example, the revenue estimated growth is around 4% and if you look at it, the range is also subdued at around 3.3 to 6%. And Q1 FY16 was quite subdued as well with a decline of around 6% in terms of sales. EBITDA expected to be down around 1.2% for the quarter, with the margins coming in at around 25 versus 26% on a year-on-year basis, and this compares to margins of around 25% in the previous quarter as well. Profit expected to decline around 14%. The reason for the subdued numbers is because of the US markets, which is expected to be the key underperformer, 39 to 40% of sales, but they haven't seen any sort of meaningful approval from the US FDA in terms of a drug. Yes, they have received approvals, but not meaningful enough in terms of giving that boost to the numbers. Plus, they are seeing competition in a couple of their key drugs such as Suprax as well as Cymbalta generic, which should possibly weigh on the US markets. Japan likely to be flat to a marginal growth. India expected to be strong at 14 to 16% odd. Rest of the world, which is South Africa, Latin America, is possibly expected to continue its growth in constant currency, but we'll have to see the currency impact on that. And the overall profit decline will stem from the overall sluggish numbers that the street is expecting, a higher tax rate plus a base impact. Q2 FY15 profit had jumped around 50% on a year-on-year basis.
All right, Ekta, thanks a lot for that. So that's Lupin, but just about 2.5 minutes left for markets to close. So let's just do a quick recap. It's a bad day for the market now actually, because the market is closing at the lowest point of the day, and all through the day the market kept grinding lower and kept making lower low intraday. In terms of individual names, banking stocks tracked the most. So Yes Bank was down about 3.5%, Axis Bank was down about 1.5%. There was a bit of an earnings shocker from HDFC, and that stock clearly dragged the market 2.5% lower on HDFC. In the morning it was one of the top gainers, but ended as one of the top losers, so that's a big drag. Asian Paints of course was down through the day, down 5%. Apart from that, Reliance, ITC, these were a couple of other stocks that dragged the market. Along with of course Larsen and Toubro, which was also down. Coal India was also lower. In terms of stocks gaining ground today, BHEL was up 3.5%. Bajaj Auto, where we had a CLSA upgrade, was up 2.5%. And metal stocks did well. Vedanta and Tata Steel both were in green, probably because of what happened in China. And a couple of IT stocks also did well. HCL Tech was up 1.5%. Lever saw some buying after the recent correction. The stock was up about close to 1%, but really low cash market volumes, just about 14,000 crores, and almost similar activity playing out in the mid caps as well.
Yes, in fact, the mid cap index was under pressure, down about 0.5%. Eros International was the biggest loser, down about 20% followed by Sterlite Technologies post its numbers, down 7%. HCL Infosystems was down about 6% VIP came in for some profit taking, down about 4.5%, and it was largely profit taking that you saw in stocks. So Ashok Leyland down about 2.5%, United Phosphorus down about 3% post its numbers. On the upside, you had GSFC that reported good numbers, so up 8% there. DCB Bank has come in for some rebound, so up about 3%. So has Motherson Sumi, up almost about 1.5%, and LIC Housing Finance also had it good today, up almost about 1.5%. But the week has not started off on a good note. In fact, down 0.5% for the key indices. But just to point out, even some of the global markets came in for profit taking. So if you look at the European markets, the CAC is down 0.5% right now. Hong Kong gave up all of its gains by the end of the day. So globally as well, we haven't seen any kind of major rally. In fact, many markets have traded in the red or closed in the red today, and we have sort of followed that benchmark today. We end at 82.50, so not too much has been shaved off after a good 1 week that we had last week. Today the markets have come in for slight profit taking. But let's get back to our guests. Ambrish, we were talking about the two companies that will be reporting numbers tomorrow, Maruti and Lupin. Between the two, what would you pick?
No, I mean, my pick has been Lupin for a while. In fact, I recommended that recently at levels of closer to about 1800, 1850, and I have a target of about 2200 to 2300. I mean, although the expectations are nothing too great this time from Lupin, but then it's been a consistent performer. So in case we see again levels of closer to 2000 or below that, I think that's a buying opportunity. Whereas Maruti is something which I feel is, I think, overpriced at this point of time, because clearly I think the best is already priced in, whether you're talking of the good numbers, the higher margins. I think everything is discounted, but then we need to see as to how quid actually starts hurting Maruti, where it hurts the most, because that's the entry-level segment, which is the main bread and butter for Maruti. And I feel that what Duster had done to Mahindra, possibly Quid could do to Maruti. So I think at these levels we need to be a bit careful.
Okay, Sudarshan, you have been bullish on lever for last 3-4 days. Do you think the uptrend is going to continue?
Well, I think it will outperform the Nifty. If the Nifty keeps on struggling between 8200, 8300, then lever is likely to inch upward. But if the Nifty decides to take a day off, goes below 8200, becomes a short sell, then lever may not rally, but it's certainly going to do better than the Nifty. So I think it's a buying opportunity on every dip, even on minor breakouts. And even if you are short in the Nifty, I could be long in lever.
Okay, Mayuresh, another stock that you've recommended for the longer term investor to look at is Garware Wall Ropes. Take us through that.
So Sony, I think it's a small and mid-cap company into technical textiles, more or less to do with two business divisions of synthetic cordage and the industrial fiber and products division. So it caters to a whole host of industries: aquaculture, agriculture, sports. And again, I think if you look at numbers in the quarters gone by, I think it has been an impressive performance, at least on the top line and EBITDA front. Top line has grown by 20%, EBITDA margins at 10.8% in the quarter gone by. And clearly, I think the input costs, because they have a lot of they derive a lot of input costs from high density polyethylene and nylon, which have seen significant correction, and those are ultimately linked to crude oil derivatives. I think we're going to see a massive amount of correction on that front, which will aid EBITDA margins going forward. Clearly, I think the export component at 50%, the company expects that to increase to around 65% because I think a lot of this demand on sporting nets, tennis nets actually is coming from the export markets and the US markets in particular. So that will probably ensure that the debt of 45 crores that the company has actually got down from 140 crores and the interest payments from 70 to 10 odd crores will keep on coming down. That will improve the cash flows for these companies. The EBITDA margin should sustain between 10 and 11%. And clearly, even from a valuation perspective, our take is a 12% top line growth and 18% bottom line growth, and valuations close to 12.1 times seem attractive to us. So I think a target of 390 over the next 9 to 12 months on Garware Wall Ropes is not ruled out.
Okay. Amrish, would you buy Eros after the kind of fall it had?
No, not really. Not even at these levels. Although we have seen close to about a 40% fall, 45% fall. But then whatever the analysts are talking about is quite serious.
Amrish, just hold on to that thought. We have the Bharti Airtel management that's addressing their numbers. So let's cut across to the conference call.
While to get the whole things in order. Glad to see the participants are back, and hope all of you are safe, and wherever you are, your loved ones are also equally safe. There was a slight change for the timing today because we are actually, all of us, the management is in Singapore. This time the board meeting was held in Singapore. As we speak, we are calling from single offices for this conference call. Before I hand over the call to Nilanjan, I thought I'll take this quick minute to introduce him. As you know, last quarter Nilanjan got appointed as the global CFO, and he will give you the initial opening remarks, post which we can take over the Q&A. Thanks so much. Look forward to the call.
Thanks, Ajit. Good afternoon, ladies and gentlemen, and thank you for joining us today for this earnings call to discuss our results for the second quarter ended 30th September 2015, which we announced earlier today. Let me introduce you to the senior leadership team who are present with me on the call today. Gopal, the person
you are speaking with has put your call on hold.
Okay, we'll do one thing. We'll redial that conference call and get back to that in a bit. But Amrish, the telecom space,
right.
How would you approach it now?
In fact, I have been a bit skeptical on the telecom space for a while, and now, especially with the Jio launch, which is, I think, quite sure in December, I think that will lead to disruptive pricing in that space, which will actually break the margins for most of the existing players. And again, from January, in case we have that call drop thing coming through, In that case, I mean, just imagine the sort of penalty which the telecom space overall would be paying. I mean, you're talking of nearly 87 crore subscribers, 3 rupees a day, which works out about 260 odd crores per day.
Not bullish on
so
this,
yeah, I mean, it will become about 95,000 crores. I mean, like at the maximum. Okay. So even if you take 10-20% of that, it's about 10-20,000 crores of penalty.
I'll have to stop you again because we got the line back. So let's just cut across to Bharti con call again.
SPAR has suggested the operators to compensate for the call drops in the network.